Hello folks, welcome back to my channel. This is the third part, the third episode of institutional level mentorship. So the Fibonacci is probably end. I want to start something like new. So for your I will do this uh, to get a good view in this market. So in this market, Euro USD. Uh, First, I will tell you about liquidity because the most important part of the market is liquidity. Without liquidity, there is no any single move. Every single move is based upon liquidity. So when does liquidity happen? How it occurs? What is the valid liquidity? This actually the advanced part. This is not the part of basic uh, legendary basic. This is not the part of legendary basic. This is the advanced part. So for that reason I have to upload in the institutional level. So we have to find the equal lows or the equal highs. For example, uh, I know you guys, you don't understand right now what is equal lows, what is equal highs. I'm gonna show you guys just a little bit like this. So if you, yes, we did it. This is the equal highs and this is the equal lows, folks. What I'm gonna be teaching you is that this is liquidity, folks. If you understand, this is not the equal lows. This was the equal lows which is swept by this. Now this is the equal lows, this and this. These are two equal highs. Sorry about that. This is equal highs. So there is some liquidity. The market's going up, sorry, going down. Touch these levels to add more retails. To retails think that this is the resistance line and the market is go and then touch, go back down and then touch and then again down and then again they think that it will touch and boom, we have to go in the profit. This is what the retails think, but we will not trade in that case. We have to trade with the opposite of retails. Not too much opposite. What I have to tell you, this is true. This again retrace again to add more retails and then go a little bit down to add more retails. There's more confirmation that this is retracing and booms there stops. This is the point. This was the point that retail stops was be placed. Some retail stops will be about this high. This is the retail stops. This again will be the retail stops. Some retails market will be at this stop loss will placed. Someone will be, sorry, for example, someone will be at that place. So all the retailers is out of the market. So what is more important? This is external range liquidity. This is external range liquidity. After that liquidity, which this is stops, I have to delete this stops, which is hit by retails. Delete. Okay. So this was the entry of retails which hits their stops, okay, above, and then go down, right? So this is a 30-minute chart. I will trade in a short-term base. For example, you have to wait to sweep liquidity, and also uh, uh, before, I mean, after sweep liquidity, you will look for market structure shift. Where is market structure shift? Where is, for example, this is the point where market is going down, okay, folks, and then go a little bit up. So this is like a current and most valuable against of trend. So this will be our market structure. So our market shifts here. So now what we waiting for now? We waiting for something like a 15-minute order block. For example, I have to mark that zone too, because we have to go to the 15-minute and see more accurate result. And the 15-minute is right there. Have to adjust in the 15-minute. So where is our rectangle? Have to find this is our rectangle. So we could be trade that particular high, but since I have to show you the shortened trend to trade in a high probability, uh, for that reason I will tell you this. So after sweeping liquidity, this is the liquidity. A lot of retails has set there and they sweep liquidity. You will wait for market structure shift. Market structure shift. So this going up. So where is the market structure shift? This is the market structure shift. But if you can see it here, this is the market structure shift too. This is very clear and discernible entry in that model, folks. So I see this is a short-term market structure shift. This is what ICT teaches, the short-term market structure shift. This is what the all the YouTubers will not teach you, the real market structure shift. This is what I have to tell you. You know about market structure shift. You don't know about too much market structure shift. I know a little bit, but I also know about candle structure, not market structure, but the candle structure. For example, I have to tell you a little bit I will guide you that what is market structure. For example, uh, it is approximately based upon the Steve Nissen patterns. For example, this is the Steve Nissen patterns, which is uh, bullish bearish engulfing. This candles engulfed by this. So this is like a candle structure shift. Once the candle structure shift, this will be when we go to the 5-minute, this will be the market structure shift like that. These three candles like that. So when they shift this market structure at 5-minute, so we will be wait for, this is all confirmations. Now we will be wait for something to hit that order block, breaker block. So guys, I have to color him a little bit, lightly color. I don't want too much this color. Okay, This is too light. I like this. So where is the order block? Where is the breaker block? Where is something else? Where is fair value gap? Well, and where is inverted fair value gap to do our profitable entry? Now, the first step is mark liquidity, sweep liquidity above this line. First step done. Second step is market structure shape, which is this in a short term, in a short period. This market structure, sorry, uh, this market structure. Okay, anyway, this market structure shift. And the third confirmation is to wait for something like order block, fair value gap, breaker block, mitigation block, and like rejection block. Anyway, we'll be wait for this. So this is breaker block that I see. This is breaker block. I have to mark that breaker block to enter that zone, and which is like a bearish break block, since I have to do it in a red way, this, because this is breaker block, a bearish breaker block. So once they enter in this breaker block, this will be our third point. This is our third point to enter in a breaker block. After that breaker block, you have to do OTE entry in this model. So guys, this is our uh, like breaker block. Is the first confirmation that this is the breaker block, and also in this breaker block, and the fourth confirmation is that we have to do some OTE and like a Fibonacci, where what I told you in the first and second episode of this mentorship. So once you apply this, uh, you have to a better reward to risk ratio. Wow, what a great profitability. What a great profitability. There's some rejection block there in this place. So for that rejection block, will be end over end trade. This is rejection block. So once I color this green, because this is the sign of upside trend. Once they reject that green, there's all the rejection block in that zone, in that area. There's also the rejection block. There's also the rejection block. I mean this point. Well, zoom in, wait for. This rejection is called a rejection block. So there's all the rejection block in this area. So a small fair value gap in this, but more rejection, since reject a highly, when they reject a little bit up, there's a sign to close our entry, to do our profit. Because why I don't take that place, because there is some order flow in the upside. Once I take the 1 hour, you will understand each and everything. That's why I do it. This is because of this in 1 hour. This is because of this fair value gap. For example, from that high to that low. This is the gap. I have to do like a purple color to do more in confirmations, to do purple color So this is our a fair value gap, a highly conformative fair value gap. So this will be stops of entry. This in 1 hour, they reject just their la like when I once I delete this rejection block, green candle. Let me delete this because we have to confirm to go rally in this position. This is the starting point of this fair value gap. This is the fair value gap. This is the fair, clear and discernible fair value gap. This also the point. This also in that point. This also the breaker block too. We see. So there's more strong in 1 hour. So you could be expect also in that move is the upside. So folks, I'm too much busy. I'm not uploading too much video. So if you like that content, so please like for more institutional mentorship video. This is the third episode of this mentorship. So see you next time. I will upload what can what a strategy that I have to upload. Tell me in the comment sections. So from now, bye bye. Take care of yourself. Good trading.